information. So once again, the next speaker is going to be Master Trainer Greg Capra, and he's from the company called Pristine. Now, Greg Capra is the president and CEO of Pristine Trading, and it's a leading online educational service for active, self-directed traders and investors. Now, Greg founded Pristine in 1994 and has written 2 seminal books on trading and investing. One is Tools and Tactics for the Master Day Trader, and the second one is Trading Tools and Tactics, Reading the Mind of the Market. He's also a 6-time Money Show Live Trading Challenge winner. And so with that, we bring you Greg Capra. Take it away, Greg.
All right, so I'm going to give you, an overview of part of where I started from, my own personal development as a trader, what I went through from the beginning, where it took me to, and put it together. As I said, it's an intro to Pristine Trading and a plan to start out that you couldn't use on Monday, putting this all together. And some of the things I'm going to show you, I believe you'll be able to incorporate them into what some of the other presenters have actually shown you, because it's a method, to how to use the technical analysis in your chart reading. If you want to apply that to your option trading, if you want to apply it to your equity trading, if you want to apply it to your currency trading, you'll be able to do that. So while I'll be primarily focused on equities here, just realize that the technical concepts are universal to whatever it is that you want to apply them to. Okay? As Mike had said, a little history about myself. Pristine did start out in 1994. We've been doing this a long time. I've traded my own real money in expo trading challenges in front of thousands, in front of audiences. 1/6 of them. It's a great experience. First time's a little nervousness, as you would imagine. You're getting in front of that big audience there, and it's like, oh, please, I hope I'm going to make some money here, and my stop isn't hit, and so on. And luckily for me, they went really, really well. Waited for my setups, did them, and was able to make some money and won those trading challenges. These are the books that they've written or co-written. You can get those at Amazon. There's actually 3 of them. As I said, we've been doing this for 20 years now. Actually, it's going to be 20 years to the date next month. And as it says, we've been doing this, with hedge fund managers. We've even had New York Stock Exchange specialists come to us. Believe it or not, these market makers and specialists and so on, they don't know much about the charting part. So the ones that have come to us obviously wanted to accelerate their knowledge, because they primarily, almost exclusively, work off of order flow. They know what's coming and going, and that's a huge advantage that we don't have, but we have the charts to look at, and that's a huge advantage. And when you know what you're looking at, you know where the majorities are going to act and what they're likely to do. We've trained equity and Forex prop traders, those that need capital. As the prior presenter mentioned, that options are a great tool if you have limited capital, but you can trade and get tremendous leverage as a prop trader as well, and that's one of the services that we do at Pristine. We've trained people that know absolutely nothing. I knew absolutely nothing when I started out back in the 80s. Absolutely nothing, folks. And there wasn't the huge amount of information that's available today, like that you are getting in this short period of time today. I mean, this just wasn't there. A lot of our competition has come to us as students and eventually became educators themselves. Great testament to Pristine. We've been voted best trading course in 2012 and 2013. We do lessons like this a couple of times a week for about 2 hours, aftermarket lessons. On Thursdays at 12 o'clock, we do a market review and the actual trade reviews of some of my moderators and the trades that they've taken. They review them with you midday and what's happened in the market. So, if you go to the site, get signed up, you get access to that and, spend a little time with us. Right. Disclaimer. You can lose money doing this. It is possible. We all have lost money. This is part of what we do as professional traders and investors. That's why we have stop losses, because there are no guarantees. We take calculated risks, and you have to approach everything, in the markets in that way. Well, our goal is to make money, right? Everything's about a calculated risk so that we can survive the next trade. One loss is not devastating, and this is one of the biggest reasons why many don't make it. You hear the statistics about how many fail that attempt to do this. Well, while I believe that's probably true, I believe that those that get educated do a lot better, and the statistics are much, much better. But, the other reason besides a lack of education, you hear about the patience and discipline part, and it becomes, your responsibility after the education as to whether you're going to make it or not. Will you follow the rules? And education doesn't guarantee that you'll take the stop or that you'll put the money in your pocket when it hits your target. We're all in search of that Holy Grail. I know I was, and if there truly was a Holy Grail, meaning a sure thing out there, I would have found it, because I worked day and night, read anything I could get my hands on, and when you first come to the markets, and being a novice, you believe that there are some secrets out there that you need to learn, that somebody has the magic, and the magic is education and finding a method that works for you, but there's no sure thing, of course, and I think everybody here knows that, but we have to find out what it is that works for them. And I'm going to give you a little history of what I went through or how I found what works for me, because, as it said, is sometimes you have to come full circle to get back to what really makes sense. And because I had this belief back then, and I believe a lot of people do, there's a pretty strong tendency to think that this is the type of analysis that's required to make money in the markets. That upper left there, again, I don't know what they call that, but I studied a little bit of that, and I just said, this is a little bit too complicated for me. The square of 9, you've got your Elliott waves, you've got, your time cycles and Fibonacci retracements and extensions, and I put a lot of time into that, and channels and different indicators, and, you can get to the point where you start using all of this stuff and it's overlapping each other. You can't even see the bars. You're trying to make sense of it. And, the analysis paralysis starts to sink in. And I started to think to myself, I can't make sense of this. Do I even want to try? And I did try. But did it really work? And there were too many subjective parts to it. Why do prices stop on the line sometimes? Why do they ignore the line at other times? Am I drawing the line in the proper place? Well, I moved to the simpler technical analysis types with the various indicators, multiple moving averages, stochastics, MACDs. And I said, well, which are the right ones? There are so many. Your trading platform today, some of them, the ones that we might say are limited might only have 50 or 100. The higher end ones could have 200. And as you start to think about the different settings and how the indicators change and the location of moving averages change as you change time frames, it just becomes extremely daunting. It did for me, and I was at the point of giving up, because I just couldn't. I could make sense out of some of it, but the consistency wasn't there. There was too much confusion, you know. And this is, if you put enough lines and moving averages on, I'll prove to you that I can find the turn with one of them at some point on some instrument. But why does it work at times and why doesn't? Where is the consistency in what we do? Well, I decided I have to get rid of this. That was my last chance. Clean the chart up, get rid of it, see if it makes sense, Greg. Does the light bulb come on, or go back to what you used to do? And that's what I did. Back to basics. And keep it simple. Right? Then whatever the news is, I can maybe use that information to my advantage, but it's about support and resistance and the trend. That's the key thing. Whatever your approach is, whatever your method is, whatever the tools are, it comes down to the trend and support and resistance. So I wanted to keep that simple. So here's the foundation for a trader's mindset. From my mindset, from my point of view, that these price patterns were a reflection of what other traders were thinking. You know, for me, and I was looking at charts and trying to make sense out of them, and I was like, you know what? I know what I'm feeling at this point, and at the beginning where it's trial and error, and a lot of times it's losing money, and sometimes like, well, I don't know if I should adhere to that stop. You know, I knew what the stop was, but was that really support? Maybe it was just one of those times where prices were going to just flip around and go back up in the direction that I thought they would, and then they would fall. And I was like, now I'm so sure it's going down. I'm hitting the button and getting out. And you feel that devastation, that feeling in the pit of your stomach. It was like, wow, again, and you get out and it turns around. Well, I want to associate those pictures with feelings, because if you can connect with that, the charts just make a whole lot more sense and meaning. And they're going to guide your thinking. So we wanted to find these pictures. What does buying look like? What does selling look like? Where is it most meaningful? Right? So we can have pictures of buying or selling, but when we put it in the context of its location, the right locations, increases the odds of it working out. Of course, money management is a key. You can learn all about the theory of technical analysis, but without a money management plan and a plan to manage the trade, your likelihood of success is not very good. Right? And as you do this for a while, you know, you hear about having confidence and patience and discipline. Well, that comes after some time of doing. And it's just like anything else that you can learn how to do and go to school for. You know, after you get out of the classroom, you won't necessarily have confidence in it. After the experience part comes the confidence part, and then once you have that, you know, you say, well, I can have patience now because I know that my setups, when they're aligned, the odds are in my favor, and it becomes a lot easier to have that patience and discipline for it to set up. So we need to determine these areas called support and resistance. So when I look at an area that I believe to be support, well, I say, well, that's where the demand is. That's where the buyers are. And resistance is where the supply is. That's where the sellers are. So I'm always looking at a chart and how does it become more meaningful to me? And when I communicate that to someone that wants to learn, how do I make it meaningful to them as well? So that trend, right, it's either going to be going up, down, or sideways. Right? It's one of the three. Now, I want that to go back. That this third point here, right, determine if there's a void. Right? In other words, an area without significant reference points of support and resistance. And I came up with that concept by asking myself the question. I asked myself lots of questions when I started out. Why does this happen? Why does that happen? Why didn't this happen? Well, why do prices trend at times and not at others with the setups look initially the same? Well, when there's no reference point for you and I to place those buy and sell orders, support and resistance, there's a greater tendency for prices to trend to the next reference point. So that's a big part of understanding why prices move when they do. So I'm going to align those patterns with my bias. So this is the location of these patterns are going to be the key. Now, you've probably read or been told this basic concept before regarding support and resistance. Support and resistance levels, they're not fixed prices, yet tools like trend lines and Fibonacci points, retracements, would tend to create a belief that they are. You know, when you start to or try to define a support point to within a decimal point, I think you're approaching the holy grail syndrome of trying to predict something with ultimate certainty, and it doesn't work that way. These are areas. What is constant is the concept of support. Once broken, right, that support will become an area of resistance. Is it significant? Maybe, maybe not, but we have that reference point to look at. Resistance once broken, right, it'll become an area of support, and we continue to just look at prices as they move between these different reference points. When they come down to prior supports, as the little guy down there is saying, hey, I'm a buyer. There were buyers here before. Yeah, I think there's buyers going to be here again, and let me see if I get that picture of buying. You know, when it hits that resistance point, well, I'm a seller. Let me find a picture of selling. Right? It's really simple. Well, when it's trending, see the support points were resistance points, and when prices come down to those areas, I want to be a buyer. And every time prices are trending and prices come down to what was support, that prior high, get a little, they come down to that high here, I'm going to be a buyer. Prices push up, come down to that area again. I purposely drew this so it poked through it a little bit. I'm going to be a buyer. Pushes up through it. Well, look what happened here. It said, what changed up here? Since I can't see your questions or answers, I'm going to answer that. But one of the concepts is to read increases or decreases in momentum. So here we see the very nice increase in momentum, push above the prior high. Over here, prices come up above the prior high and begin to turn down. And this is what the indicator methodology will have you look at through indicators. So higher high, momentum slowed, it didn't push as high above this high. Indicator makes a lower high. Oh, bearish divergence. See? Indicator said it was going to go down. Don't need indicators. If you can read the difference between highs, you can figure out if momentum is slowing down. Down at support again, I'm a buyer. Well, it retraced almost 100%. Well, that's okay. I call this major support. I'm a buyer. But I do understand that prices may not exceed the old high because of the extent of the retracement. I'm going a little quick here, guys, but you know, I don't want to take up too much of the time. We'll get through this, and if we have some time, I'd be happy to take questions. And as I said, of course, you can come into, you know, join that community. Michael put that link on. Come to our workshops, and we answer all the questions there. So here's the concept of this void, and you know, I focus a lot on failure patterns, even little minute failure patterns like this. When I look at a chart like this, and I say, well, look at this big gap up, and you know, there's this theory that all gaps get filled. Well, sometimes they do. Doesn't mean they have to get filled immediately, and gaps similar to this suggest strength and continuation. Well, as I read this chart, and I say, oh, tried to dip down and it popped back up again. His tails are on the bottom. That means they were buyers, creating a little support here. If that gets retested, I want to be a buyer down here. And this is where I'd want to buy. And these candles right here are a picture of buying, and this is where I would want to buy it. Now, as it was moving up, I have no reason to believe that it can't continue to move up. Now, I've got a management plan on how to handle this, and you know, sometimes we all might get in a situation like this where everything looks great and boom, it gaps against us. If you're a swing trader and you're holding overnight, this is a risk that you take. You can't, it's unavoidable, but the gains are there as well when it goes in your favor. But here's a gap down, and it's like, well, that wasn't supposed to happen. And see this little candle right there that clears those highs and come back in? That's my bread and butter, so to speak. When I see that in a situation like this, to me, it says there's money signs flashing because somebody got caught on the wrong side, and this thing has no support until down here. The odds are really good it's going to keep going down. And then you go into management, and the closer it gets to a significant support level, the greater the odds of stabilization. I'll just give you a little tip here. When you see a candle like this with the range expanding after multiple bars down, you're close to a low. Okay, so here's my plan here, what I want to do for intraday trading. And I've got S&P E-mini on here. This could be Facebook. This could be the euro. It makes no difference. I see a 60-minute chart that's uptrending. My bias is that it's going to keep going up unless it hits some significant resistance area. Right? Now, these prior highs within an uptrend, they're going to be little resistance areas, but prices should exceed it. And what I'm looking for is prices retrace here. I'm going to look at this 5-minute chart and look for that transition. So this little star here matches up. Little double bottom down here. I see green candles. I see red candles that don't follow through to the downside. That communicates buying to me. I don't need any indicators, waves, bands, or any of that. I just watch the price action here, and I say, hey, big time frames up. The road is down at a stopping point. Right? I'm going to get on the bus. I know there's some resistance up there, but I'm going to get on down here. And regardless of what happens, I've got a good reward to risk here. I just want to see a picture on my smaller time frame that lets me get on board. Here's the pullback here on the 60. I go down to my 5. I see buyers are taking control. I just repeat, do the same thing again. I'm not confused. I'm not confused here. But could I be confused? Yes. If this was just a lot of whippy, overlapping, going nowhere candles with tails on the top and tails on the bottom, I would be confused in my higher time frame and I would do nothing. I'd look for something else, actually. I wouldn't do nothing. I'd just look for something else to trade. Well, let's look at a few examples and starting points here. Well, here's a 60-minute chart. Am I interested in this? Well, it says I'm not interested because it's down to support already. It might stabilize, but it's already fallen down here, and there's no trend. So I'm not interested. I want to, move on to something else, find something that has better odds. There's no trend here. Another example. Well, I'm still not interested. And this is what you go through. I don't care what you trade. Stocks, currencies, E-minis, commodities, doesn't matter. Just because you can look at it doesn't mean you're going to trade it. Things have to set up so it makes sense to you. And this was in a relatively tight range, so nothing to do here. As I said, if prices were to break through the support, and because there's this, what I refer to as a void below here, I would become very interested, and I would then move down to my 5-minute chart and look for pictures of selling that would get me on board, because now I have a bias that prices will continue to drop. Here's an example of that. I'm very interested. It's down here, so now I'm looking at my 5-minute. I'm looking for little retracements. I'm looking for possibly breakout failures, because I think prices are coming all the way down here and maybe below this. And I would look at the daily chart to determine the possibility of breaking below it. But at this point, the highs appear to, the attempt to move higher has failed. Notice this gap up, big red candle, and then it breaks the support. Odds are extremely good. It's going to go down. Why not move to my smaller time frame, find an entry point where my reward to risk is good, right? And reward to risk, there's no guarantee it's going to work. So I want to get in near some resistance as it retraces and then manage it from there. Now, trading against the trend, it's possible to do that. The majority of times we're going to be trading with the trend, right? But when we trade against the trend, I want to see an extended trend. I want to see that prices have accelerated. Well, see here how this has been moving? Pretty uniform, right? Moving highs to lows. But when prices become extended, when traders become so convinced that prices are going to continue to move higher, they accelerate in one direction, in this case to the upside. So when they accelerate and they reach an area of resistance or supply, odds are that prices would then begin to retrace back down. Now, I'll give you an example for right now. Prices, if we were to look at the NASDAQ 100 or the S&P 500, and we see prices have been moving up very steadily, and they've begun to accelerate. Well, one of the things that I would look for on Monday and would hope happens is that prices would gap higher, right? Gap above, even though they accelerate now, even gap higher, where traders were becoming excited about this trend. And I know they are, because I watch what the option traders are doing. Look at the total put-call ratio, and on Thursday they began loading up on worst possible time, but that's what they do. The novices do, the uneducated ones do, and you want to keep track of that. So a gap up on Monday would set up a situation where I would be willing to fade that gap or short, and I'll see if that happens. So here in this lower time frame, we just do the same thing. I look for a reversal, break of support, retracement, you short here when prices are extended. And I'm just mentioning different patterns down here, right? Pristine sell setup, and M-top, which is a retest or continuation patterns. As I said, I'm big on looking at some type of failures and these candle patterns. When I look at a candle like this, the one on the left, a breakdown, and it turns into a bottoming tail, I know somebody got caught. If I can find that in an uptrend, the odds are fantastic that that's going to go up, especially if something's basing at the high of the day. WRB means a bullish wide range bar. A big wide range bar turns into a topping tail. Can you imagine if on Monday, instead of a gap up, prices open up maybe a little bit lower and then accelerate, where we get a range expansion to the upside, but by 4 o'clock in the afternoon it looks like this, a topping tail? That's the picture of money to me. That means it's going down. Right? They rarely get away with getting, bypassing something like this without dropping in such a situation. And sometimes it looks like this, right? And understand with candle patterns, getting caught up in names is a waste of your energy, because if you change time frames, the candlestick patterns change. What you have to understand is retracements, right? And that this went down and it came back up again. This would look like a bottoming tail, what we call BT, a bottoming tail. If I compress this, if I expanded this information, it would look like a green bar up and a red bar right back down again. So you understand when something retraces 100% of what it previously did in a situation, you have the location and the situation where prices are extended, maybe they're up at resistance, the odds increase that things are going in your favor. Okay. We'll look at a few examples here. Look at this topping tail bar. Prices were going sideways. It appeared that they could continue to move up. Right? They were consolidating here. They tried to dip down and they came right back. And now, this was a big green candle. Notice the time, right? Notice the time here. This is an E-mini contract, and this happens. This is in the E-minis right at the open. This is my favorite setup. Doesn't happen every day. But when I can get a setup where first thing in the morning traders got caught, breakout failure, right? Leveraged instrument, they don't want to lose money, right? And they know, and a lot of these traders are underfunded, so they're going to get out really fast. So this shock that occurs helps to drive prices lower. And notice the expanded range here, and then it's stabilized. And I mentioned the expanding range after multiple bars down. And it continued lower. And I don't know, in this example, was it near some support? Probably not. That's probably why it continued to move lower. All right, let's put together some other time frames. Right? Again, we're always going to define the trend, where support and resistance is. We wait for confirming price patterns. So here was a daily chart. I forget what the stock was, but it was something that I was monitoring at the time and actually traded the next day. And I was on my list because it was moving up and up and up and into this resistance area. Notice the acceleration, the expanding ranges right up into this resistance area. Why didn't they buy here? Right? This is a setup that we teach, this 1, 2, 3 setup. It's a continuation pattern. Why weren't they buying down here? Well, because there's uncertainty after the decline. They're not so sure. Over here it's becoming obvious, and now they're jumping on board and more jumping on board. And up here is where the sellers are going to take profits. Technical Analysis 101, buy at support, sell at resistance. And here's what happened the next day. Prices were going sideways. This green bar here was, the end of the day was going sideways, which means it accelerated in the morning and rested in the afternoon. That's actually good for the potential to continue, but it was up at resistance, so that was a strike against it. And we get longs caught, topping tail bar, breakout failure, hit the bid. Just short under here, put a stop here, and wait to see what's going to happen. Well, there's the symbol if you want to. I took note of it. IRM. It was IRM at that time. And prices just dropped into the area of the first reversal period. There are times during the day where prices have a very high tendency, especially in the morning, to have short-term reversals. Some testimonials. I won't spend much time on that. You can look through it. We've got tons of them on the website. You can go to the website and read them. But obviously go to the website, become part of our community. Lots of free stuff in that community. Articles that I've written. There's videos there that you can watch. Tremendous amount of stuff and access to all of the the free aftermarket lessons that we do during the week. So here's an example of what I want to look for and how I want to use this information that I've just shown you. And here's my 60-minute chart. Caterpillars falling into an area of support. There's going to be buyers there. I drill down to my 5-minute chart. I want to see the evidence of those buyers coming in near the low. Notice the volume spike here. And then the retest down here. And it retests again. And then a wide range bar igniting. And I mentioned to you wide range bars ending. Well, we have wide range bars igniting. Now, here's another concept. After a wide range bar ignites, ideally prices go sideways and consolidate versus begin to pull down or back into it. That is a great sign that buyers are stepping up. They don't care that it's pulled away from support, and they're buying anyway. That tells you that there's strong demand. And when I can combine this picture with this picture, the odds are in my favor. Here's another example. Here was a gap down, JP Morgan. This was some time ago. So I look over to the left from my first reference point of where there's supplier resistance. That is where it should turn intraday, and I'm looking at my intraday time frame and looking for pictures topping tails, caught. Right? Little breakout failure. Right? Traders tried to push it up, failed, short it. Right? Big picture bias is in my favor. It should continue to go lower. Here's a currency pair. It works on anything. Works on anything because it's all about you and I and other traders. What we're thinking. Right? Are we getting caught? Are expectations being met, or are they fading away? 60-minute chart coming up into an area of supply. Notice the little topping tail there on the 60. Right? Though you don't see those too much, but when they do, right, that's a great sign. Because you got bigger time frame traders getting caught. Now here's the star, the alignment right there. Now here's the break. What was support should become resistance. I want to be a seller up here. Narrowing momentum, little changing of this guard as we call it. Sell it short and go to management mode at that point. How are you going to manage it? Well, one of the simplest ways to manage is to just trail a prior bar's high and just let it do that, and you can scale out of a piece of it if that's going to happen. But what you want to do, the greatest opportunities are going to be where, hey, there's nothing to the left over here to stop it from going down, because that's where the big money is going to be placing their bids, their buy orders to get to buy for looking for a reversal. If there's nothing there to the left, what's going to stop it? Odds are nothing going to stop it. Here's another example. 60-minute is in the downtrend, moving down, plenty of room to fall, move down to my lower time frame. And this is a little bit of a different example here, because maybe I missed the move over here initially. That doesn't mean it can't go lower, because there's nothing to stop it from going lower, but there's no resistance over here. So one of the concepts that we teach is use a retest pattern. This will create resistance, and when prices come up into it to retest it, if that gift is given to you, that retest, and you get a picture of selling, go ahead and short it, because the big picture says it's going to go lower. Get on board and manage. This example, I've used a higher time frame daily chart coming up into resistance. We do it in the same way, right? So I mentioned the broader markets earlier. If they were to gap higher after going up several days in a row, well, it's a similar type of situation where the odds of a turn are pretty high. Well, in this situation, prices rallied up, multiple days in a row into an area of resistance. Odds are they were going to retrace. It didn't mean the daily chart was going to collapse. It could experience a couple of days, 2-3 days easily of some selling. Well, here on my lower time frame, somebody got caught. Right? It says gotcha. Right? It popped up, big topping tail. As it cleared the highs, I want to short it here. I want to short it here. I noticed that tail right there was a larger green candle, larger to the one that preceded it. So sellers came in aggressively there. So that's another setup or signal there. I shorted under here. I shorted under here. And then I want to manage it. As it says, what did that candle look like before it was completed? And this is part of the thought process that we teach when we talk about candlesticks. What were traders thinking? Well, what are they thinking now? What were they thinking when this was a big green candle? I'd be thinking, hey, that's going higher. But it's up at resistance, not likely to go higher. Well, at the completion of that candle, it tells me that the big money came in and crushed it. And they're not going to go away on the next candle. What are they going to do? They're going to keep selling. Okay. So I've given you some tools to work with here. Right. Use multiple time frames, higher for your bias, lower for your entry. there's no perfect or right or wrong time frame, right? I'm showing you a 60 and a 5. Someone else will show you, a 39-minute chart for who knows, or a 55-minute chart because it's a Fibonacci, and what? There are endless combinations. There's time charts, there's tick charts, there's volume-based charts. There are lots of choices, like there are indicators. You have to make a decision. What are you going to use? What is your method going to be? It's a choice that you have to make. If you try and use too much, you will get confused and you will stall your progress. Right? I know you're all here today because you want to make progress. You're learning. But if you try to consume too much information, it's just going to take that much longer. So you're in search of something here today. Right? What makes a light bulb moment for you? What makes sense? And once you get in touch with that, stick with it. Right? And don't be all over the place. Your support resistance, is there a void? Understand relative strength and weakness. What are the broader markets doing? Sectors, market internals. If you're trading the markets or stocks, market internals are a big part of analysis that can add a lot to your understanding of what's going on. Trade management, money management. You have to have that. You have to have a trading plan that works for you. Right? My plan may not work for you. It works for me. Maybe, it doesn't work for you. There are other things that may not, so part of the time you're going to put into learning about the markets is searching, and realize that it's part of the process, and give yourself that time. If you chase the money initially, and it's not about learning, the odds are going to be against you making it. So you need to have that longer term view to this plan of succeeding in the markets. And it's going to take you some time, not only to learn a method, you'll have to spend time learning your execution software, and even little things like, do I like white charts? Do I like black charts? Do I like multicolored charts? I mean, do I like my 5-minute chart or my 60-minute chart in this location? This all takes time, folks. So, don't rush it. Just understand that you're going to put in some time to do this, and allow yourself that, because if you just get in there and looking to press the button without the education, odds are it's not going to work. When I do these presentations, we're here hoping to gain you as a student and as a customer. And what am I going to offer you to entice you to take my class or get interested? Well, the only thing I'm going to offer you today is something for free, for you to get to know who we are, because I think you have to get to know who I am and who Pristine is before you want to trust us with your hard-earned dollars and your future education in the market. So go to the website, get signed up for the community, put in your name and email address, view those videos, view those articles that I've written that are in there, come into our aftermarket lessons next week and listen to what we have to say. And if it begins to make sense and the light bulb starts to come on, email a counselor at pristine.com. You'll see them dropping their names in the chat rooms when you get there next week. But get to know them and who they are, and find out more about what we do. Something else, I thought of offering you guys for free. If you want to email support at pristine.com or counselor at pristine.com, I'll be happy to share with you my personal interest list, and I will put it in a chart format for you. Provide you with maybe 1 or 2 time frames and the symbols of what I'll be looking at next week, and see if that maybe makes sense for you. I'll offer that to you for no charge. We'll send that to you. So either support at pristine.com or counselor at pristine.com, and they'll send that off to you. And I think you'll find it interesting, as well as everything that's in this community that you can learn. Pristine has a preferred broker. I am a licensed Series 7, Series 24, Series 56, prop license is a 56. and I think I have, I don't know, some other as well. I've got licenses and licenses, and I am registered with Lightspeed. Um, if you open up an account with Lightspeed, with me, of course, I give discounts on Pristine education. I do free education every other Tuesday with my brokerage clients. I do, on the other Tuesdays, I'm with my Pristine clients and students, teaching them. So I take a very active role in teaching those that come to Pristine and or me over at Lightspeed to help you make money and do it intelligently. So you can visit pristine.com/Lightspeed, see more about that. Go to the Pristine site, of course, and look at all the great information that is there for you. We've won awards not only for best education, best online trading room. My chart of the week was voted the best newsletter. That's a free letter, by the way, that when you go to the site, and you could read that. I write that, comes out on Mondays. I think some pretty good stuff in there that you can learn from. So go to the site and find out more about us. Get into those aftermarket lessons. Contact either the counselor or support at pristine.com. I'll send you my interest list for next week. And I hope you have enjoyed this presentation, because I'm right there with actually about a minute to spare. If I have any extra time, throw your questions out. If you don't, you're welcome to email me, Greg, G-R-E-G, at pristine.com with your questions. Be happy to answer you. I have lots of students email me all the time. What did you think about this chart? This trade? Did I do it right? What did I miss? And I answer them. Send them back a chart with comments. And if it's too involved, I say, can you wait until Tuesday? When we get into coaching, and we'll go over that in real time with you. Or those students, they go into what we call our graduate room, which is open every day, Monday through Friday, in the middle of the day, where one of my moderators go in there and review trades, review seminar material. We're big believers in repetition and supporting the students for as long as they need. So